All right. Welcome everyone to Forward Focus. It is November 22nd. Woohoo! You guys getting a little bit chilly up north, I bet, right? It's a little bit chilly here actually, and we've had a crazy storm system going through this week. Dumped a ton of rain here in Tucson throughout all of Arizona, I think. So not so much fun here. I'm sure a lot of you guys up north are still wishing you'd have rain versus ice or snow. We are going to talk about what we are looking for in the next couple weeks ahead. So next week we have a holiday here in the States. I need to double check our exchange closures. A lot of times futures markets will close at noon central the day before holidays, so I need to double check on that with the CME group. So always make sure you are positive about when you got your exchange closers, as Nicole can tell you, one of our last holidays. Overall, it's going to be a pretty light week. What I found during holiday weeks is that we still get really strong technical patterns. The thing that happens though is that with kind of less participation, what we often see is that you need to go to the larger time frames for those patterns. Hold on one second, you guys. So for example, if you're normally trading like off of a 500 tick chart, then you might want to go up to 1,000 tick to find a strategy. And you'll find that intraday there might just not be as many trades if you're a day trader. So that is something that you'll want to watch as we head into next week. We will still be having Forward Focus next Friday. I will just have an assistant with me. He's still more into Minecraft than he is trading. I don't know what is wrong with the child. 8 years old, he should already be trading a sim account. Right? Yes, see, I've got lots of agreement here. I know, he's defective. I'll have to fix it at some point. He does get into it sometimes. It's kind of like, one day he wants to do something, next day it's something else. Return him for a new one. You're broken. They told me at the hospital that there were no refunds, exchanges, or returns, though. So, man, yeah. He has the gene in him somewhere. It just might be not expressed yet. That's what we're going for. Okay, guys, let's take a look at the markets right now. So we've been following the NASDAQ. I'm going to pull up the NASDAQ here first. We've been looking at the NASDAQ on the weekly time frame. Got to pull up the right chart for you guys. And here's our monthly. Let's fix this and we'll make it. Well, I'll make this one on weekly over here. And we'll make a daily on here as well. I swear I will update these charts this weekend. I am reinstalled my Ninja on this computer. I'm actually going to switch over to my other computer this weekend, I think. All my charts reset. Let's see here. Okay, you guys, grab my pen. So what we've been watching on the daily chart and the weekly chart is this channel that's been forming here, and it's kind of an ascending channel, and the pattern is very reminiscent of a Momo 2T, and a Momo 2T is basically halfway between a momentum reversal and a momentum reversal plus. So for those of you that haven't been paying attention the last month or so, here's a momentum reversal. You get 3 highs. Momentum reversal plus, you get 3 highs. Usually that happens when there's something that's just not quite right with the momentum reversal. Maybe the pullbacks are more shallow or something like that. So you get the 3 highs, 2-way pullback, 2-way move back up. And then this is the plus portion, which is basically a 2T over here. And so that's a short. The Momo 2T is halfway in between. You'll get the 2 highs, but then you'll get a bit of more of a pullback and kind of goes more like that. So it can also look like this. So you'll get kind of this extra stall before the previous high, and then you'll get the higher high. So it'll be a 2T, and you don't quite have the full momentum reversal portion over here. That's what we're seeing happening in here. You've got the pullback, the move up. We don't have like really good V's or inverse V's here, especially on the way back down. But it comes back up, stalls, so it doesn't go to that third high for the momentum reversal. Instead, it pulls back and then does that move up. So what we're seeing at this part here is that we've got a measured move zone here, and then we have the smaller measured move that we saw going into the start of November. That's where we were starting to see, hey, this is where momentum can shift on the smaller time frames. So this one, yeah, you want to do a screen capture? I will do that. So this one is the Momo reversal. I can't write very well with a pen. Here's a Momo plus, and here's the Momo 2T. That's beautiful, right? I should make you guys a prettier diagram of this though. So this is what we've got going on here right now. And this means that we are very open to seeing a bigger correction as we head into the new year. Now, nobody likes to see a down market in January, but it happens. So that's what I'm watching for as we go into the start of the year, looking for additional bear patterns at the highs here, additional reversal strategies, really being more cautious on the upside. This is what we would call a do or die point. And I posted another great example of that on gold here just a minute ago in the League of Traders channel. And I want to show you guys that here quick, because it's really interesting how one pattern can turn into something else in those critical moments. So what I want to show you right here is we were watching, Harvey had mentioned the potential for an inverse head and shoulders on the gold. I'll show you the chart here. So here's what we were looking at. And it had the shoulder potential here, the head potential here, and then the right shoulder potential to start here. Neckline, of course, was tilting to the upside, which not ideal for an inverse head and shoulders, but it had a good 1, 2, 3 on the way up and stronger momentum there. So, that was kind of open. It had nice, perfect 2-wave measure for a bounce at that level, but momentum overall still kind of on the stronger side. So what usually happens is this can do like a little blurb here and then turn around. And in this sort of situation, usually with a correction where you've got a 2-wave move to the downside, it's more likely that it can do another inverse head and shoulders. So what can happen is that you will get a smaller inverse head and shoulders within the bigger inverse head and shoulders. So that's what I would have needed to have seen to do a buy setup on this. So on this, what I also wanted to do is to look at the time frame chart. I wanted to show you guys next is also time development. We've been talking about time development all week. So this is really the key point in time development that this shoulder should have started to have gone and created an upside move. Now, because the neckline was tilted to the upside, sometimes it goes slightly past that measured move distance. So you've got the distance from the low of the left shoulder, the low of the head, and then where you want the right shoulder to start to take off. So you usually want that low to be here or a little bit over here, and then to take off at that time extension. So I was willing to see if this could, still offer something around in here where we kind of had like a slower measured move into the fib support, but it needed to hold that zone. So I call this a do or die zone, and let me show you the details. So here's what's going on just a 10-second chart. And I pulled this up because this is where you can see the detail a little bit more. We have a price correction and then a time correction. What did I teach you guys this week about this particular set of circumstances? Yeah, it's more bearish in general. So you have better luck with this as a short trigger than you do looking for a reversal trigger. So if this had gone and done this, where it put in like a little baby 2B or a flush or something right here, that can help turn that around. But when it goes out to that same time development, the same two waves over, so now this is about the same amount of time as this, and both of those have two waves, not so good at that point to get a lower low because it's much more likely that it's just going to break. And this is what our week in League of Traders has been about this week, is looking at this. So this is the core exact do or die point right here. So what I did, I'm going to give you an even closer example here, is I put the two scenarios on here. So if you're short, this is the point at which you've got a measured move right here. And it's about 50% of the drop over here. We've also talked about this in our time development class this week. So if it's going to bounce and give, kind of a not ideal to be because of the trend placement, it would happen here. So your buy setup or your bounce would be basically if it breaks this to the upside, then it could go at that point. It's a higher risk setup though, because of the larger trend placement and momentum. Trend placement because you're halfway on the way back down, and then your momentum overall stronger correction here, slower here, so not as ideal. So for the other way, you would already have been short on this, and it would go and look for, first of all, measured move to this level, basically using this high, but it can also go from this level down for a measured move if momentum picks up. I happen to know that it did stall at about that zone, and then it went and pushed a little bit lower after that. Let me grab a chart I'm going to show you guys a little bit closer up in this. And I'm going to do the measured move for both so you can see both levels. But I need to make my lines fatter. Okay. Let's see here. So here again, there's the development with the time. And then here is the measured move levels, or are the measured move levels. So the first one is right here, second one is right here, and that's basically where it's bouncing right now. So second one comes from the shoulder down, first one comes from the high down. So a lot of times that will stall it, but it might go a little bit further if it has more of this kind of, in this case, I call it a check mark, but this case it's like an upside down check mark. Then you can get that going a little bit further. So that's just kind of a little bit more advanced details on what we got going on right now. So this is a major level of support again, and we are actually seeing a reaction off that level too. It's probably around a 76.4% retracement too, going back down to the lows. Since we're already talking about gold, let's pull up the larger time frames on gold. Oh, is the check mark what I said was the new pattern? I mean, yeah, I've always kind of used it in the context of whatever scenario it was happening, like in a Phoenix. I just call it like a two-wave correction, but we should probably have another name of it. Oh, you called it a check mark. Okay, I don't know. I've thought of it as a check mark too before, but it's because it kind of looks like that, but I have no idea where I got the name. So maybe it was from you. Shoot, where I was going with this. Oh yeah, larger time frame on gold. What do you guys think? Is that a good name for the pattern? Should we call it a check mark? Upside down check mark? I like names that are descriptive, and when you see them, it stands out. And basically that's what we had on gold as part of a shallow avalanche attempt too. It would be that upside down check mark. So here's the shallow avalanche on gold. And even though this didn't get going and continue on the downside as a shallow avalanche, still call it that because the upside moves were overall stronger. The difference is that this has an inverse head and shoulders at the high. Most shallow avalanches will have a pivot and then the shallow avalanche portion. Here's the shallow avalanche portion. Still got going, but it did a measured move right here and then kind of got stuck. So in a true shallow avalanche, what would look like is it would have more of a pivot at the high, the two-wave correction, two-wave like that, and then drop. That would be more like a textbook. And then it would go for a 1, 2, 3 down to here and then widen up. And that's what we would normally see, a chicken wing. But that's another vote for the pattern name. So we do have that same kind of check mark thing going on right here. See this? So here's the check portion, and then there's the arm portion of the check mark. And so that's going on here too. And this is predominantly a bearish pattern when it's slower like this. And then if it's on the upside, it's more of a bullish pattern. So you'll see more like that. So what we've got on gold right now is that it's at a lot of support. This pullback compared to this upside move is right about at a 1-to-1 ratio. Momentum is slower, so that 1-to-1 ratio is a do or die point to try to get going. I do think if it tries to go here, because of the impulse moves over here, it would have a little bit of trouble at that previous high. That is something that it would need to watch for. I want to show you guys the weekly on this too. Maybe not even the weekly, maybe the monthly. Yeah, I'm going to show you the monthly. I kind of like chicken wing. So monthly, we've got a good shift in momentum. You know, it came off of the high really steep. This is what we saw happening in things like Bitcoin, let's see, Shake Shack, a lot of those like just things that just get these like blow off tops, have the avalanche. And in this case, the momentum shifted here. So this is just like that do or die point that I was showing you guys on gold on the smaller time frame. That's the same type of thing happening right here. So this goes to that measured move, right? And it can either go like this and break down, or it can shift and break up. This base was kind of more on the bullish side though, because it kind of had a little bit more of a pop to it. So it helped turn this around here and went out longer than we would usually see for Phoenix, but we're getting that momentum kind of picking up here. So this is an interesting zone because it could continue and give us a stronger bullish move on the monthly time frame. And if the overall market is indeed turning over, it makes sense that it's trying to form that sort of a pattern. So it would generally come back up to this, you know, zone up here and then try to shift momentum, or we could easily get that trying to go for a double top on the monthly time frame. Overall, I'm still pretty bullish on gold, so I'm not really too concerned on the downside at the moment. What would happen to make me more concerned on the downside is if this turned into something like a shallow avalanche, because that could shift that momentum back down. Don't think we'll really see that unless the market just goes gangbusters again. But we're really not seeing an indication of that quite yet. So want to be more cautious on the overall market on the upside still. Just looking at smaller swing trades to maybe some shorter term position trades in some cases, but overall not too keen on this as like an ideal a longer term buy zone. So that's what I'm looking at here on gold. Since we're on the topic of commodities, I'll pull up oil as well. Oil has been really active this week. Get the chart posted. So here's a weekly. You can see that same two-wave move into main support here. And this is kind of looks like what gold is doing on the monthly chart, right? So you've got that two-wave shift at the low, and then kind of a longer base, and then the breakup. And in this case, it wasn't even as strong as gold is. Gold is even stronger here on its break to the highs. And see how oil went and did a this is about where gold is right here. If you're looking at similar pattern development, let me put that. I'm going to just go back and show you really fast. See this? So here's the two wave. I'm going to draw it on here. There's that. That pops, pulls back, got this little correction here, pops, little correction there. Okay, so now I'm going to go, just let me draw right over the top of this so that when you go back, when I go back to oil, you can see that same pattern there. So this is here to here, here to here, here to here, 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 here. So that's where we are as far as comparable patterns go. That's why I think that oil that gold can go higher there. And that it has room to make it back to the highs. And after that second move, that's where momentum can shift and become wider. And so that's what we could be expecting on gold too. So right now on oil wind crashed again off of that. And it's been kind of messy in here. This doesn't have a perfect pattern. It has a potential for that inverse check mark, but it's kind of messy within this range here. So here's what the inverse check mark is trying to look like that. So that's what it looks like on the weekly time frame. Let me show you the daily. Get a little bit more details here. And then I'll go even intraday for you. It's really cool how these series of patterns repeat over and over again, like one steps into the next. So here's what that inverse check mark, oops, is trying to look like here. So what we need to see is that this is actually kind of at a do or die point. So it pulls up, we've got a two-wave move up, and then it goes into this two-wave correction. So if this is going to manage to go higher, it really needs to break here so that it can do that tilted phoenix and get that tilted phoenix off this ground. But it's still going to run into all this trouble up here where it could still turn around at that point and then go back and break down out of that check mark still. So even though we had strong upside the last couple of days, it's still not a confirmation yet for this breakout. We saw it try to break a little bit earlier over here, kind of a check mark like this. Let me change my color. So try to do like a tilted check mark like that to get going. Just couldn't quite make it. So increase the time development so that you are more developed on the time development, and then try it again. Is trying again up at that upper level. So we'll see. I am not going to rule out either way. This is a do or die point. It's where new entry triggers are higher risk because this comes from the lower end of the range to the upper end of the range. So breakouts of this range could easily pull back into the range before they try to get going. False breakouts can also happen and then break lower. I'm leaning more on the side of it trying to break higher, but I'm not going to completely bet on that, I guess you could say. I'm not going to full out bet on that. Let me give you the intraday here on 240 so you can see what's going on there. You'll see the 1, 2, 3 into the high, which means that we are exhausted at this high. So here's this move here. So see, we've got this 1, 2, 3 pattern. Oops, 1, 2, 3. And a lot of times that can have that extra little blurb to it and still pull back. So it's trying to pull back into this range. Here's basically our key channel level, but it won't confirm a breakdown until it breaks that lower channel. So even if that still breaks lower, it's not a confirmation until that channel actually fully breaks. So you can trade the smaller setups on here and, you know, hold partials using advanced trade management to go for a bigger setup, but higher risk here either way on entries on the bigger time frames. All right, let's look at some of the other markets. What do you guys want to look at here today? Here's our Shake Shack. Costco. Ooh, Costco looks pretty good for a bigger correction here. So look at this on the monthly. You got the 1, 2, 3. So we would call this a steep 2T, and it's trying to shift momentum. So this will usually pull back. A lot of times it might not make it past the S2 point on the pullback. So it might only come into like this level and try to bounce again. But it's looking good for a bit more of a correction. You can see the shift in momentum here on the daily chart too. TSM, that's also trying to shift momentum here. We're starting to get a number of tails on the weekly time frame too on the upper side. See these? In candlestick analysis, they call each of these a shooting star. I mean, a pure shooting star won't have a little tail on the bottom of it, but that's essentially what we've got here. So it's definitely showing me that we've got exhaustion coming in and the momentum is trying to shift. So this is a double tap. Here's that shift in momentum you can see on the daily chart. So it does look like it's going to pull lower. First support is going to be a lower end of a trading channel. It'll look like that. Sometimes when this is tilted higher, you'll see it look like this, and then it'll come into support there. So right now this is looking like it's kind of basing here, like it's gonna still try to go lower though. So even though this is slow to start out with, this could easily go and gain speed too and do like a shallow avalanche on the 60-minute. NTES. I think NTES is done short term too. And it has to do more with like wave count type of thing. So kind of looking at this is the upside over here. This is correction. This is the 2-wave upside. And then this is kind of a retest of that previous high. So even though momentum is really strong here, I have a feeling this could drift down because of the way this is formed to come out of here compared to up over here where it's stronger. So it's basically the channel is shifting momentum. So looks like we could get this trying to turn and drift down. Something weekly on here. What would usually happen here on the weekly with this trying to go higher is it did try to do like a shallow phoenix, but it should have kept up the momentum here. It should have like been working to try to gain that momentum and increase the momentum, and it's just not doing that. So it's not offering that confirmation. You can see it with a megaphone too. 1, 2, 3, 4. So the fourth low here is the buy trigger, but it should have had a faster move up into 5 and then maybe stalled the momentum a little bit, but then pushed through it. So I'm concerned about this shift in momentum right here because that's not normal for this to keep going really bullish. LB looks like it might be due for a little crazy pop. Let's see. Yeah, I could see this doing like a little rapid spike here. The way this pulled back up into the range, see how we had that inverse check mark going again? It should have kept going. Even if it pulled back up into the range, I don't generally want to see it come back up that much before it continues. It's not a hard confirmation of trying to pull up more yet, but it's not as ideal on the check mark face. The one thing I will say about this is that the range got really tight in here. So we do see occasions where it will do a flush, pop back up, and then still go. So it's basically at a do or die point, and I would go down and look at the intraday charts at this point. So let's see what's going on the intraday. Okay. That's not terribly helpful. You got kind of that check mark thing going on here. So see here, kind of got really tight. It did have a flush here on this one and then took off. So that's what we would need to see is we'd need to see kind of that immediate confirmation. It's basically at a do or die point. Then here's doing the second wave up. A lot of times though, this can, like with this pattern intraday, that can gain momentum if it's coming off of a low. If this is already extended in an uptrend and this is like a blow off top type of situation, then you might get a 2T, but then it would turn around. But it's not, it's at the low. So it can go and gain momentum even though it's starting off slow. It can go and keep going. I don't know what I would do with this, like myself. If I was already in this on a long, like on an intraday setup or something, I would probably still be holding some. Let's see. It did make it back into that previous pivot high zone. So it is a support level. I just wish it had a little bit more of a shift in momentum on that monthly chart. It just doesn't have that. Here's what we got on the weekly though. That measured move support. So that does help this try to shift momentum. A lot of times when it goes into a low like this and you don't see this momentum shift on the monthly chart, it can start out slowly. So you might get like a pop and then a retest where it can do things like inverse head and shoulders or shallow phoenix or something like that that can help kind of round that off more and get that going more strongly off of the low. But I do like this measured move here. That's really good. And I like the support level on the weekly and the monthly. It's a really good support level. So I think you're looking pretty well set on that. You got $16 calls. PG. That's trying to roll over a little. Here's that do or die point here. Got a two-way little move up right into this resistance. 5 minute. Megaphone on the daily. It would have been an even better short if this had pulled all the way back up to that level. So it didn't, it's kind of really stronger momentum here, slower, And this is like extreme momentum. So what can happen is that that has the risk of shifting momentum like this, and then it can pop back up. So sometimes the move coming down out of that, even though it's slower on the upside, because this is so extreme to start with, it can have a shallower overall drop. So that's the main risk on the bear side at this moment. You can see the weekly is looking to pull back too, but this might not like be a full true high. It has the double tap at the high, but it could still just go in like this and go back up before it would try to pull down again, because overall it's still holding up here pretty well. So it kind of depends on what your objective is, like what your outlook is. If you're looking short term or if you're looking longer term, like a longer term hold. Longer term hold, I wouldn't be surprised if this tries to go for a higher high, especially given the way it's gained momentum on the monthly charts. But shorter term, I think more of a correction here is not unexpected at all. I would consider it to be totally normal to pull into this zone again, maybe even slightly under that. Just watch this momentum coming off of here. See Disney. This is an example of how, that momentum can shift. So you've got the two-way pullback, even though it's slower into this high, triggered a good short off of that high. It shifted by kind of rounding off here. Shallow Phoenix. Disney, I think, still looks higher. I think it's still running off of the excitement with its streaming platform. I don't know for sure how much higher this is going to go. I mean, you've got a fairly short time correction compared to the upside. It's about 1-to-1. I can't draw my line straight here. You got about a 1-to-1 ratio. It would be stronger if it was twice as long to go up, just given this upside move. So you do risk when something kind of starts out like this, especially the way this is formed in this congestion, that it can go to a high, pull back, and then go high again. So I wouldn't necessarily look for like a measured move, but it could still come up here, maybe base or do something like that, and then continue higher. So Disney, I'm not feeling too bearish about right now. Sure, it's going to have shorter term exhaustion at levels, but I'm not too concerned about that. Why did Disney not fill the gap? It's kind of a misnomer that all markets like fill their gaps. They might eventually, like in the entire lifespan of a security, if it just kind of like totally dies. But if it is a really big gap where the gap is also on a larger time frame, it doesn't necessarily fill. So things like this here on the daily chart won't necessarily fill. If it was smaller, it'd have a better chance of filling. But the more extreme the gap is, the less the odds of it are filling. So if it's something where this gap size is a strong move on a weekly time frame or a monthly time frame, it's going to be less likely to try to fill. So you would consider that to be a breakaway type of gap. This is a breakaway gap here too, just on a smaller version. So it's a bigger gap like this, and it comes up. It's basically coming out of a trading range. You're more likely to get a gap fill if it's not a breakaway type of gap. So breakaway type of gap meaning there could be some channel. So you could have an uptrend channel and a gap higher, and that gap zone won't fill. It'll just kind of keep climbing. That's one type. Or it could be a pullback and you get the gap up and the gap won't fill. It's easier for smaller gaps to fill than more extreme gaps. So if it's more than twice an average day's range on the daily chart, it's less likely to fill. If it's more than twice an average week's range on the weekly chart, it's less likely to fill. Now, the futures market, the indices themselves, they will typically fill. Again, there's going to be exceptions when it's an extreme gap that is also a breakaway type of gap, but in general, they do fill. So like we've had a couple of gaps recently in the indices, and they might not fill totally right away, but they did eventually. Like, let's see, what was it? There was one the other day, like just this week. Let's see where that was, right here. So this is a good example. So it had the extreme move down, kind of slower up, and then it has the two-wave correction. The first wave down occurs with a gap, and then it still manages to come up and fill the gap. But this gap is not an extreme gap for the overall market. So it's really, it looks extreme on the smaller time frames, but in the bigger picture, it's not. So sometimes this might have gone like this and filled right away, but with it being one wave down, it went for the second wave and then kind of did that extra little push before it trying to turn around. So this is normal for a gap filler. And you'll usually see this happening over and over again in the indices themselves, like if you're in the futures market. But if this is a major level of resistance on the overall market and it gapped and opened here, and it's a total breakdown on a daily time frame, but your gap is showing maybe smaller, that gap would be less likely to fill. But this one's already moved to the downside, and then this is one move up. So it's kind of looking for another move. So it doesn't fill right away here, but it does eventually. And the bigger one on the larger time frame might eventually fill, but not necessarily the day of the gap or right away after the gap. Basically, if it shows on a weekly time frame or is extreme on a weekly time frame where it's like an average day's range or twice an average day's range or bigger on the overall indices, that gap is less likely to fill as easily. The time it tests a high too is a determination of whether the gap will fill. So like, let's say if something comes up like this and you get like a channel and it gaps down, that's more likely to fill than if it goes like this and then gaps down. Because now you've got a double tap of highs, so it's easier for that to kind of keep going. It might, eventually fill like later on, but it's harder for that to fill right away. And even more difficult is a gap that is like this and then has the more extreme gap to the downside. That's even harder to fill. So it depends on the type of gaps. I mean, I've done entire courses just on gaps themselves. So it's kind of like a cliff notes on different gaps. CGC, canopy growth, growth. Daily could be a blowaway bottom. Usually with this rapid move up, that pace would try to shift. It would kind of go slower to start, but could keep going. Let's go see the larger time frames though. Monthly, and that's really good support on the monthly, but it's a lot like Shake Shack. So these can go up and give you like these pops, but then they're more prone to coming back down. So this would typically do this pattern here. So it might do like a 2-wave in here. Let me clear that and make it cleaner for you. So the most common pattern that would happen right here would be this. It would go like this, it would go like that, and then try to bounce again. And the degree, what the momentum is on each of these could be tilted. So it could be, this might have like a little bit stronger of a 2-wave down. It could start a little bit earlier, but that's usually what would happen here. What's my opinion on Tesla and their new electric truck? I don't know. I can tell you that they are hiring again pretty strongly. One of my best friends, they just got job transfer to California from Washington for Tesla, like pretty high level computer stuff. So they are actively seeking out more high level people to join their team. So it's obviously not, I mean, that's a really good sign for the company. So as far as that type of thing goes, it's pretty positive. I don't know much about the truck itself and what they're rolling out. We are at resistance, of course, on the monthly time frames. We did talk about this last week, though, where I think it was last week, it might have been the week before. The main thing we need to see is this had a time correction first and then a price correction. So that can go as a 2-wave correction as a breakout, but it's not as strong as if it has a price correction and then the time correction. So it's not as strong as the check mark. So right now, resistance, I'd be a little bit concerned short term. Longer term, not as worried right now. Short term, of course, makes sense to be a little concerned right now because of the 2T on here. And this is a gap that it could fill, but it might not fill. It's on the little bit of a bigger side, but it's not too extreme. So this type of gap can fill. Usually what you would see intraday is well, right now what it's doing is not. It would usually do that pattern that I just showed you actually, where it would go like this and then kind of have that 2-wave down, and then it would start to turn over and move higher. So like this zone here is where you would see that trying to gain momentum to fill that gap. And that's not happening here. So I think this gap is going to be harder to fill. It might try it in a few days, but with a slower fill, I really don't know what I would do with Tesla right now. I think I would just be playing on the day trade side of things, because swing trading I wouldn't be too interested in, because like we talked about last week, what can happen with this type of thing is it can do a correction like that and then still go up for that next high. So time development could be like that and still go for another high, even on the weekly time frame. But I would be more interested in that if it was like the end of January, maybe February. So looking for like a pullback into there to do a buy for a shorter term swing trade or short-term position trade, longer term swing trade. Netflix. So it's a little tricky too because it kind of rounded off to the downside. So is it going to do that inverse check mark? And right now it's just a symmetrical triangle, so I would be looking for it to come back up to the upper end of the symmetrical triangle first. The weekly time frame definitely is trying to gain that momentum. Let's look at the daily. So it's what we would need to see here is that this needs to gain momentum like I was talking about on gold. So it's very similar with the slower move off of here. Here's the check mark portion, but then it needs to gain that momentum. And I do think it's still a possibility for that to do that based upon how this is forming. It's not, this is a pretty common pattern where what will happen is something will start off slowly. It can go like this, and then it can gain momentum. So this will be the low, and it's basically a type of shallow phoenix where this correction takes about the same amount of time as the upside, and then it can gain momentum coming out of there. But it gets to this portion here, and that's a really important part. You have to see that momentum confirming at that point. So we've seen a couple of examples today where it did confirm and where it didn't. I don't remember which one of the securities was the one that I told you was not offering the confirmation, but it was about 6 or 7 or so back. So that's what I would expect here on Netflix though. So generally speaking, I'd be looking for continued upside, but it is at a do or die point. So this can go and continue to gain that momentum, but I would want to see it confirm in here. We are at resistance short term on the NASDAQ. By the way, it's a little bit of a 2T-ish pattern on 500 tick charts and less and lower. Just like a scalp short-term pattern. Let me show you that fast before we wrap up. Hold on a second. I gotta activate my live connection here. Restarted my Ninja Trader before we went live. Actually, I'll just grab it from my trading computer. That way you guys can see it easier. Faster. Not hold anybody up. Okay. So here's kind of little baby 2T. We're halfway down on the larger time frame. So location is a little tricky. It's actually easier to see this on a 15-second chart, but that's the current little baby pattern you've got forming. Or in play, I guess you could say. And it's almost at resistance back over here. It's at some level of resistance, but there's still more over here. So it's not totally giving us a strong reversal because you can see this overall momentum here is still the same. And these corrections so far got more of a time correction than a price correction. So it would need to have a really strong pullback coming off of this 2T to give us something that could keep going. So this is when you want to use advanced trade management on, just because if it hangs out up here, that's bad. You want to see immediately this try to sell off. If it doesn't immediately sell off and it just kind of hangs around up here, then you're kind of doing that check mark thing again and can break higher. So please be careful with this one because it's one that could go stagnant and you don't want it to go stagnant. If you're short, if you're holding for a long, then you do. Whoops, wrong platform there. Hold on. BA Boeing. Boeing monthly is not very informative. Neither is the weekly. My main concern with Boeing is that this develops into a shallow avalanche. We do have the inverse head and shoulders here. Shoulder, head, shoulder. But with the way this formed off of the high here, it's kind of opening up with that megaphone. It's messy, but it was opening up with that and kind of shifting this momentum in here. I do suspect that there is a potential for a shallow avalanche here coming up going into the new year. So I'd be really cautious on the upside right now. The only reason I would look for long would be if this managed to come up and gain some momentum off of the shoulder and base, then I would be looking for it to go higher. But right now it's just, even though it's coming up, weekly just isn't that great. So even here on the daily, you see how this is kind of starting slowly? It would have to go into some sort of shallow phoenix to try to do a stronger pop. And even if it did that, like let's say if it did do a shallow phoenix, right? If it came up here, did a shallow move like this and popped back up, even then we would be looking at the potential that it could still come back and turn back over and go with a shallow avalanche, because downside and then sideways move could still be about the same amount of time. So longer term prospects on Boeing right now really aren't looking too awesome. Oh, look, we have a rat. My mom just popped her. We've been catching these pack rats around our place here. My mom just popped her head in and showed me a lovely little rat. They're actually really cute. I know. Hi, got a rat. That's not off topic at all, is it, you guys? All right. Well, we're going to wrap on that note. We're going to wrap this up here today. And it looks like I'm heading out in the desert, or she's going to head out in the desert. Let the little guy go. Or gal. Could be a gal. I don't know. All right, you guys. I will get this up on YouTube here shortly. And y'all can go back and review that. And I will see you back here next week. Have a wonderful weekend, you guys.